Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you've joined us for the third day of our Precious Metals and Critical Minerals Conference. The next presentation of the day is from 1911 Gold. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I am very pleased to welcome Shawn Heinrichs, President and Chief Executive Officer of 1911 Gold, which trades on the OTCQX Best Market under the symbol AUMBF and on TSXV under the symbol AUMB. Welcome back, Shawn.
Thanks, Lily. Great to be back with everybody, and look forward to giving a fairly large, I think, update on our progress over the last 6 to 8 months, I think, from the last time we were here. So thank you. For those that are new to the project, I will do a little bit of a background and history, but 1911 Gold owns the Rice Lake property. It's a fully permitted, fully constructed mill with significant underground infrastructure. There's 4 mines on site already, and 1911 Gold has been actively working both an exploration program around the mine to identify new areas for expansion of the underground mining and ultimately to feed into a much larger mine plan, but also prepping the underground and regaining access to various levels. And just recently, we published our preliminary economic assessment, so there will be a lot in this presentation regarding those key highlights. So just moving ahead. There are a number of forward-looking statements during the presentation, which would be subject to external factors beyond our control. So just a cautionary note for those that are listening in. So 1911 Gold is located in the province of Manitoba in Canada. It's roughly 3 hours north of Winnipeg, centrally located in the province. We're about 100 kilometers west of the Red Lake camp, and we're essentially the western extension of that same Birch-Uchi greenstone belt that gave rise to that very prolific 40 million ounces of production camp over in Red Lake, which has a significant amount of resource and life potential there. Our area has also produced a significant number of ounces historically, well over 2 million ounces on this project. A lot of that activity stopped in the kind of early 1940s as part of the war efforts when a lot of mining seems to have stopped in a lot of areas. It's kind of an interesting history. But we have a very prolific belt, which we've recently consolidated over the last 5 to 6 years. We've consolidated a big chunk of this area, and we've opened up a number of opportunities. But when we get into the presentation a little bit, you'll see that a lot of our focus is really around the existing infrastructure and mines, which contain a significant amount of resource, 1.1 million ounces of gold resource currently in the ground there. So one of the things I like about the province of Manitoba is the resource-friendly environment that we work under. This province is looking forward to seeing many projects come online. The government is very closely working with us as well as other companies like Alamos up north and Hudbay to see these projects come through and come into production on as quick a time scale as possible, and they've been extremely helpful to us. The other thing I note is that the province is somewhat central in Canada. Winnipeg itself is a rail hub, which brings a number of suppliers to the area, as well as a number of skilled labor and support service providers in that area. So we've had an easy time bringing the skilled talent to site to enable us to accelerate the time frame to production. The last thing about Manitoba that I really like is the hydroelectric power that runs there. Our site is predominantly powered through this hydroelectric electricity that comes there. We've got 2 10-meg transformers there, more than enough capacity, and it's the second cheapest power in Canada. So it's a great advantage to us when it comes to milling and running our underground shaft operations. What you can see on the next slide here is the prolific land belt that we have right here. Our focus really is on that centerpiece, that True North mine complex area, but there's, as you can tell, there's a number of gold indications across the belt, and all of this work has been done by us over the last 6 years. I think our next priority really is that southeastern part, and we will talk a little bit about that later on, but over 90 kilometers of strike length. We sit over 70 kilometers along that major Wanapagala fault structure on the north side. This is a really prolific area, very underexplored compared to the Red Lake belt, and it's 100% owned by 1911 Gold with no debt and no royalties on it. Our team over the last year has expanded significantly as well. We started the year with just the core group, myself, McKelly, Gary O'Connor, the two experienced geos and the finance guy trying to figure out this asset. During the course of the year, we attracted a number of talented individuals around us, particularly Suzette, who joined us in the summer, has been instrumental on advancing our shareholder communications and programs, as well as working on strategy. And then Eric Vignette, most importantly, joining us in December of last year. Extremely experienced mine engineer, worked on a number of narrow vein underground mines across the world, seen many assets similar to this and has brought them through to profitable production. He'd been working with us for well over a year before deciding to join full-time as a COO, and we're happy to have him. Moving to the next slide, you can see really the performance of the company over 2025. Things really accelerated for us in the fall. Obviously, there was optimism around the gold price, but there was really more of a recognition of the status of the company and the phase with which we were in. So close to production at that stage, we were able to tell people confidently that we were a year and a half out. That attracted a significant amount of attention. And the second piece that was very exciting was the low CapEx required to get into production, which you're going to see shortly when we get into the PEA. That was it, bringing a number of new institutional and retail investors to the company and really carried the stock up. Now you've seen we've traded sideways a little bit since then. We've consolidated very well around that $1 to $1.10 range, setting a very good base for us moving forward. We have an exceptional mix of shareholders led by Eric Sprott at 14% and a strong institutional foundation underneath us as well. So moving on to the next slide, just looking at the cap structure, as you can see, relatively clean, very few warrants outstanding. Most of those are due within the next 18 months, either related to the last financing we did in December or some related to brokers that have assisted us along the way. Share price, very strong, very exceptional volumes. We've been trading very well over the last 6 to 12 months, having traded well over $2 to $3 million worth of shares a day, and sometimes far above that. We've also recently received exceptional support through the three analysts noted there, the most recently being with Roth Capital, that Mike Niehauser published his report in the middle of January. All have a significant amount of experience and history with us. It takes a long time to get these guys over the line and get their interest and support, but we are there, and they've been very active, as you might have seen on that webcast we did a couple of days ago. So we're in a good spot. Just moving on to a little bit more on the project itself. I'd like to take a look at, maybe go on to the next slide. There we go. Now we're into the PEA. So this is what we put out on Tuesday morning. We did go over this at length that morning as well. We had Eric Vignette on there, and we were able to do a bit of a deep dive into the project. But what you see here is a very strong foundation set for the company. Over 390 million net present value and a very high IRR of 105%, really evidence of the fact that this is a very low capital entry into production scheduled for 2027. What we were able to determine through this exercise too was that we have a lot more life in us than we expected. We were looking for something around 8 years. We ended up initially with something over 14 years. We pulled it back, tried to compress the time frame a little bit. We got an 11-year mine life, producing between 55 and 62,000 ounces annually, setting a really nice foundation for us going forward. What I'd like to say is a couple of things, though. This was built around a resource that has not been updated since 2018. We did remodel and republish that resource after vetting it ourselves in 2024. But this does not include any of the new drilling data, particularly those that occurred over the last 14 to 15 months, where we've had significant discoveries made around the mine and in close proximity. So I'm going to spend more time on that later, but I want to just tell everyone that this really is based on what we already had, what we inherited, and what we've already been able to de-risk. So the fact that we're able to put a profitable mine plan around that 43-101 resource that we've had before is exceptionally exciting for us and sets a really great baseline. On the upside, as I mentioned, we see significant potential to expand that mine life through the new discoveries around the mine area. These areas are within 300 to 400 meters of existing workings, so they're very close by, similar grades, similar types of geology, same host rock, So this is going to be very easy for us to do over the next 2 to 3 years. And then on top of that, we see significant potential to optimize the existing production both in the underground, but also at the mill. We will improve recoveries, we'll increase throughput, and we'll bring higher grade from the mine as we develop and continue our drill program. So just moving on to the next slide. Here you can see the total capital related to the project. This is for the life of mine. A lot of this is sustaining capital. Some of the upfront capital is buried in there. There's about 59.2 of upfront capital associated with the PEA. A lot of that is the development required to get into the areas where we can start putting the appropriate stopes into the areas of first mining for us. There's also the crushing plant. It's just a little over 13 million hiding in that infrastructure line. All the mobile equipment is included in there as well. And then process plant upgrades and refurbishment, which is all underway right now. So what I'd say here is, there are some assumptions in here, such as everything is purchased outright versus leased. For us, a company like us, we would look to, make sure the cash flow is spread out as much as possible. So the 59.2 is probably a little high. I think we can probably make that a little lower through managing those leases and those arrangements on equipment and timing and scheduling appropriately. But it's still exceptionally low cost in terms of getting this fully into production and then those first 10 to 11 years of development as well. Moving on to the next, you can see the production profile here. Again, this is just the baseline. This is looking at what can we do with the 1.1 million ounces, and of that, the 530,000 ounces that we've captured in the PEA. What does that look like each year? What areas are we going into? And scheduling that out accordingly. And it's all based around your ability to put the right amount of mine crews in the right areas without people running into each other. And it's using existing workings and existing infrastructure on surface as well as underground. So this is a very realistic model. I'd say this is close to a PFS as you can get on a PEA. The margin of error and difference on this would be exceptionally small compared to other companies which are still in the, we need to get our permits, we need to do the development and then get into the construction phase. That's all largely behind us. But you can still see we cap out at just a little under 62,000 ounces in that year 5. That's because we're in the deep east part of the project, some of the best grades in the underground, and that area is wide open. So I'd say we can do a lot better as we drill down into that territory. And I think that grade can improve. The grade drops off in the later part because we're over into some satellite mines, the SG1, SG3, and they're typically lower grade, but they're also more inferred resource out there. So I think with additional drilling and additional work from us, that grade is going to improve, and we will look to increase it as well. And I would say that we might actually end up, swapping SAM West and SAM Southeast and the shore targets for that, and pushing SG1 and SG3 further out in the line, which will eventually result in a much higher average grade coming out of the underground, and probably a lot, increase in the amount of ounces produced as well. But that's just a little bit of background on how that was put together. Just moving on to the next slide here. This is actual visual of the underground workings. Here you can see the development in the PEA layered over top of our mine. And you can see how in the background, just there off to the left, that's that SG1 mine I was talking about, and over to the right is Cartwright. You're going to see in a minute how our new discoveries fit into that picture, but it'll be readily apparent how they kind of close the gap between the shaft mine there in the center and some of those satellite areas like Cartwright off there to the right. But this is a very realistic mine plan built around a 4.5 meter wide development across here. Sub-level distances of around 18 meters, and then a 25 meter stope for the most part. There's going to be some minor areas that we do cut and fill, but this is predominantly going to be a long hole operation, which tends to be very productive and very low cost relative to the other areas. All right, next. Now we get just into the more exciting part for me, the financial guy. This is the cash flow part of the model. Look, it starts out producing around $50 to $60 million free cash flow to the company. What I would say is that if you change those numbers to 4,800, which we use as our spot price, or even 5,500, that number moves up quickly to 120, 130 million free cash flow a year, up to 150 to 160 million of free cash flow. So our project is very gold sensitive, not very sensitive to construction prices or other factors. But with every change in gold, you do get a significant uptick in the free cash flow coming out of the operations. So this becomes a much larger project. We've got the cumulative cash flows there. The NPV at $4,800 gold, which is that middle box, is just under $1 billion. So this asset grows significantly. And that is, again, just using the 1.1 million ounce resource that we've already got. We're going to grow that significantly over 26. All right, I think move on to the next slide. Get into this. This is where I want everyone to kind of take note in terms of the potential here. We started 2024 and came into 2025 with a strong understanding of the geology on the property. This is a snapshot of the mining lease area where the 4 mines sit. Each of the mines sits on a favorable host rock type there. The San Antonio Gabbro, that brown line where you see a lot of red circles all over it, and then that shoreline basalt, the green unit there, and then there's a couple of smaller diacetic breccia units. Each one of those is a very favorable host rock in terms of chemical content and porousness of the rock. And then all of those discoveries were built around intersections of those shear vein structures going east-west across there, those little dotted lines. And our drilling over the last 14 months focused on several of those areas where it appeared to be either not drilled at all or under-drilled or drilled only from underground. That led to multiple discoveries on surface in close proximity to the mine. And we've continued to drill over 25,000 meters into those areas. And we're going to continue that program both from underground and on surface over the next 12 months as well. So we'll get into a little bit more on these here in a minute. Looking at the next. This is a cross-section on the San Antonio Gabbro itself. So we've just taken a slice across that brown unit that we were looking on the last slide. In the middle there is the True North mine. It was originally fed off the L13 and Hinge vein, which is kind of in the middle. And that's what they mined back in the 1930s, 40s, and 50s. And then getting into kind of the mining that took place in 2000 and 2010s, you're moving over to the L13 and then down into that deep east area, and or L10, I mean. And the interesting thing about L10 is that is actually the lower part of our SAM Southeast or San Antonio Southeast target. So you can see it's been mined at the lower levels, and we've just managed to drill off the top 700 meters of it, and we've got about another 400 meters below that. So there's over a kilometer open up dip from that area that was mined, and that's probably going to be one of our first targets to bring into the mine plan here in the near term. And then Shore, which is further there to the right, it's our newer discovery. We're drilling that from underground, and we're going to do a surface drill program from the lake here shortly. That one's wide open all the way down like 1.5 kilometers. It starts to come into deep east there, just on the edge. You can see there's actually a bit of resource associated with it. And then on the left is the Sam West, which is that Cartwright South shear structure that comes in there. We've extended that also about 700 meters down dip, about 400 meters vertical distance from surface. And that one is wide open. So that can go down for well over 1.5 to 2 kilometers down dip. And Cartwright, again, is part of our resource, but it's never been drilled below 400 meters. So it's also very wide open. I expect all of these to continue to extend, and we can mine into these from the existing underground workings, which is what we're going to be planning for this year. I think we'll have a couple of verify slides here. So we're just looking now at the resource overlaying on the workings, the underground workings. So you get a bit of a 3D visual image. And we can just maybe move on to the Cartwright resource here next, or the San Antonio West. So this is where San Antonio West is. This is just kind of looking just up to the west, sits right between the Cartwright resource there, you can see on the far right, and the main mine. We actually have a level coming off of the shaft there, which comes out right underneath San Antonio West, right where we've drilled it to, and comes all the way out to Cartwright. So we just discovered that level. It's kind of some history there. And we think that's going to be a great access point for us, first for drilling and ultimately for production. and you'll see in a little bit why that production matters. Moving on to San Antonio Southeast and Shore. On the other side here, you can see those two targets extending down. The purple one is Shore, and the other one is the San Antonio Southeast. Those are both very close proximity, both to the shaft mine, and in the case of San Antonio Southeast, it's actually close to L13 off of the Hinge mine. I don't want to throw too many names around, but we have the ability to potentially ramp into there from the Hinge side, where we have already some access from the L13 mine area, which was a splay off of Hinge. But more importantly, it's close to the underground shaft workings. And our long-term strategy, which everybody would have heard on the call, is really to optimize our ability to develop not just down dip, but also to start bringing in resources up top. So if we're starting to mine higher, closer to surface, we're optimizing all the ore movement back to the shaft. We're going to rehab loading pockets on the shaft area. I think there's one on level 10, there's one on level 6, and there's the start of one on level 16. If we can start working with those loading pockets, even one of those will give us a much higher loading point for ore and allow us to increase the tonnage to surface by at least 2 times, because you're shortening up the distance from that area to surface. All right, move on to the next slide here. This is just an isometric view. Now you're just looking, we've sliced across the gabbro here, but we're kind of looking at it trying to get a 3D image. So here you can see Shore, which is the far right, wide open for 1.5 kilometers. Sam Southeast, we've drilled the top 700, still about 400 meters below it. That's open, and then if it opens up again after you get to the bottom of the mine, and then you see how wide open Sam West and Cartwright in particular is as well. So we will be drilling these out over the year. Our focus will be a lot more on infill drilling in preparation for the restart of mining operations. But we do look at San Antonio Southeast as an area that could potentially come into the mine plan very early. So we might do a lot more drilling there than would be otherwise expected for an exploration target. And a lot of this will be in our resource update towards the end of the year. Okay, we'll move on to the regional view here. One of the things we try to highlight, is we've got that 1.1 million ounce resource. We're very confident in it. We've now put the PEA around it. We've captured 530,000 ounces from it in an economic, profitable mine plan. But there's a large land position around us, which is all owned by us, has great access to hydroelectric power, and has road access throughout. We will focus next on that southeastern part of the project area, where you've got 3 historic producers. One, I guess, got 4, one's quite small, but all high grade and all very shallow, wide open at depth. So there's significant potential to grow each one of those into something similar to a true north mine. Same types of shear structures down there, intersecting the same types of host rock. There's a pluton in the middle there, which that's why our property has kind of a bit of a curve around there. And that's really controlling the structures around there. So just get into, I think Ogama might be coming up here. We've just completed a 2,200 meter drill program on this Ogama Rockland project area. This is probably our first satellite producer on the project. It's about 45-minute trucking distance away. High grade, was a 337,000 ounce, 8 gram per ton resource. Back in the 1930s and 40s, it produced about 49,000 ounces at 10 grams per ton. So this is an area that has seen production before, is wide open at depth, and has some extension possibilities as well. It sits in volcanics, so it's a little bit different than what we deal with up at San Antonio, likely to be a bit harder, but it's exceptional grade, and it's very continuous. We hit the vein every time, right where we think we're gonna hit it. So it's a bit different than what we're seeing up there at True North. So we're excited about this one. We will do a resource on it soon, and we'll look to probably try and have a PEA even out towards the end of the year. When you're looking at True North, you've got to look at it more as a hub and spoke type model. Our focus is in that center for now. We've got that mill, we've got the existing underground infrastructure. We're bringing that back online. We're going to be looking next to expand that into those new discoveries we've made, San Antonio West, San Antonio Southeast, and bringing those into production over the next 3 to 4 years, and hopefully a bit sooner in some cases, and developing laterally and increasing our throughput out of the mine. Following that regional footprint, developing and permitting other areas across the project area as we update resources and put together development plans around them. That's going to take us to the next level in terms of gold production. I think we can get close to 100,000 plus with just extending out into Sam West and Sam Southeast. But really, the big multiple comes from also starting to take Ogama Rockland into the picture and expanding into the regional belt. And then beyond that, you saw on that first map, this is a very prolific belt. There's multiple areas of exploration opportunity across the project. Just it's no lack of areas for us to be drilling at this stage, so it's very exciting for us. Next slide. On this, I've tried to bring some of this in as we go, but 2026 is going to be an exceptionally busy year. We'll be looking to update the resources on that satellite deposit I mentioned, Ogama. We'll have drill programs out in the regional belt as well, but the big focus is going to be in and around the mine site. We need to have a large infill program developing out of that PEA, probably close to 50,000 meters to upgrade resources to measured and in preparation for making those reserves. We'll also do a significant resource extension drilling program around our current 1.1 million ounce resource. And as well as continue to do exploration around those new discoveries that we've made. And this will all feed into an updated mineral resource estimate in the fourth quarter. We'll look to have a much larger resource out then. And we will evaluate possibly doing a PEA on the whole thing again, as well as potentially doing a PFS. I think that might make a lot of sense for us. But the goal here is charging ahead towards that production in 2027. So in the background, we're getting the mill ready, putting that crushing circuit in. We're going to do a big bulk sample this year. We're going to schedule that for probably start it in Q2, mine it in Q3, and probably be milling it in Q4. We're working through those mechanics right now and working through the prioritization of those bulk sample targets, but that's all coming in 2026.
Okay, we have time for some questions. Sean, I'll read the first question for you. How does 59 million of initial capex and ongoing exploration get funded, including the bulk sample, and how does that revenue offset?
Okay. Look, I mean, there's only so much I can say on these matters, but we've got, I think as of the last disclosure, we had just over 20 million in the bank. We've got the ability with near-term production to look at non-dilutive sources of funding for that, and that's certainly what we're pursuing right now. In terms of the funding the drill program, the plan here is to get to a stage where we're self-funding the advancement of all our project areas from operations while still providing a return of capital to our shareholders. So, but we're not there yet. We will need to think and consider how to fund a very large drill program across the site and how best to do that with a combination of debt and potentially having some kind of equity. Now, what I would say is in Manitoba, you can take advantage of a very large premium on flow-throughs. So that could be something we look at. But look, I think if a lender is willing to step up and do all of it for us and support that drill program, then that's something we would pursue. I have no lack of confidence in our ability to service any kind of debt facility going forward too.
Awesome. Next question is, what single catalyst in the next 12 to 24 months beyond the PEA do you believe has the most potential to change how the market values 1911?
I think I don't want to say there's one single, I mean, the single catalyst, of course, is going to be, hey, we're in production. But I think there's a series of catalysts that move us to that level, and then the re-rate happens when you reach that level. I think in terms of the series of catalysts ahead of us, is a continuation first of the drill results. That's likely just setting the floor in the stock. The commencement of the bulk sample and the announcement around the bulk sample is going to be exciting for everyone, seeing what we're doing, what we intend to achieve. Updates related to the underground mine activity always seems to be of most interest to our shareholders, and we will look to continue that, whether it's through formal news releases or if it's just something interesting, we will put it through social media. Obviously, if not, if it's material inside information. But I think the ultimate catalyst, I see it less about getting these reports done. I do think the updated MRE, which would be in Q4, is going to be interesting for everyone. They're going to see how much we've been able to add with the drilling. They're going to see the real return on their investment that's been made over the last 24 months and where that's all gone. So that's how I'd say it. I'd say bulk sample, MRE, startup of production. Those are the three big catalysts coming ahead, which turns us into a +$1 billion easily company.
Okay, if we have time for one more, we have with the current market cap versus the after-tax NPV of 391 million at the price of US $3,000 per ounce and the 998 million at spot now, how do you frame the valuation gap when you speak with new institutional investors?
Are we talking about I guess the gap between where we're at and what's being reflected, both in the base case and the upside scenarios? I think what typically, I mean, look, this is mining, and there's always an element of risk. I'd say the element of risk with a company like 1911 Gold is exceptionally low. You've got strong community and social support in the province. You've got a resource, which, you know, we've mined it. It's been mined for decades. So we have a strong understanding of the metallurgy, the recovery, the mining method, and we've got a very highly qualified team. So the risk is quite low, but you're never going to trade at your full value. I think for us, the difference right now between where we're at and there is just a lack of understanding of the potential here, and that's, you know, that's my job. That's Suzette's job, and Gary's. So we'll be out there making sure that everybody fully understands the potential of these new discoveries, how they roll into the mine, how we capture the rest of our resource. I mean, keep in mind, we only captured half the resource in that PEA. That's realistic on an underground mine. You can't drill the whole thing off like you would on an open pit. There's just no way you're drilling tens of thousands of meters of drilling into the bottom of the earth. You're always looking at extending the size of your inferred. But the larger that pie starts to become with the increase in our overall resource, I think the more excited people will get, and the closer we will trade to these NPVs, if not significantly higher, because people will start to look past the base and start to look forward to what it could be and should be in the next 2 to 3 years, and even in 1 year from now when we get these updates out. So that's really what we need to do: de-risk and inform. I think is that about as many questions as we can handle?
I think we've reached our time.
All right. Okay. Well, I'd like to thank everyone for joining us today. Obviously, we're doing our best to keep our website as up to date as possible. So please go there for further information. Reach out to Suzette or myself if you have any questions. We'll make ourselves available to answer those, and we look forward to providing updates. Again, we'll try to be back here every few months, giving some more updates on our progress and our success.